Hi everyone, this is your daily 10-minute business and finance news wrap for this Friday, the 26th of March 2021. I'm Ricardo Gonçalves. Later, what the floods mean for mail and deliveries from Australia Post. But first to the Australian share market, which rose today up by 0.49%. Let's call that 0.5% to 6,824 on the 200. The Australian dollar is lower, and that is attracting investors to the Aussie share market. In fact, the Aussie is now at a 3-month low against the US dollar. The Commonwealth Bank was the only one to fall. Oil producers doing well, like Santos and Woodside, as the Suez Canal continues to be blocked. And TPG was a big loser today, down almost 7% amid the sudden resignation of its chair. For more on that and the rest of the day's market news, I spoke earlier with Michael McCarthy from CMC Markets. Michael, the Australian share market is up today. Why?
Well, that's an excellent question and a hard one to answer, to be frank. The reason for that is we're getting very mixed leads from overseas markets. Overnight, we saw falls in main European markets and yet gains for US markets. But it appears local investors have taken their cue from the commodity markets, and we're seeing good support for material stocks and energy stocks today. Now, that might have something to do with the lower Australian dollar, having got close to 80 cents, but now back at 76 cents. And that makes some of these big resource companies listed here on the Australian Stock Exchange look very attractive to international buyers. So it could well be that international investors are taking advantage of a lower Australian dollar today.
How are you playing the market right now, given the recent moves on the bond market?
Those moves in the bond market are very concerning for all investors. They seem to be sending a very clear signal that we've seen the lower interest rates, and that has implications for every share. It doesn't just mean that borrowing costs for companies go up, it means valuations for companies go down. And so we're seeing a big rotation at the moment, and I'm a part of it as well. Selling out some of those high-flying growth stocks and buying into some of those businesses that were affected particularly by COVID, but have lower share prices overall. I'm thinking about the banks and finance stocks in particular. I'm also very cautious around the outlook for the market generally over the course of this year. We've seen a lot of optimism, so keeping some index puts in my back pocket means that should the worst come to worst, I'm going to be okay.
Can you run through how oil prices are looking at the moment in the wake of the latest COVID numbers internationally and that blocked Suez Canal?
Oil prices have bounced by about 1% today, and although that sounds pretty good, in the context of the last couple of days trading, that's actually a very small move. We saw oil prices fall by 4% last night after rising by 6% the previous night on the news of the super tanker blocking the Suez Canal. Now, I think a lot of traders were concerned that this might have been a deliberate act of sabotage, but it's become very clear that's not the case. And even though it'll take a couple of weeks to clear the Suez Canal, it'll be seen by most oil traders as an interruption to the oil markets rather than a cause for long-term concerns.
In corporate news, there's a bit of management moves. Firstly, the market didn't like the resignation of TPG Telecom chair David Teoh. Why?
It is a little surprising to see the newly created TPG trading at all-time lows. Now, that's not as bad as it sounds. This newly merged entity between TPG and Vodafone has only been listed since June last year, so it's yet to celebrate its first birthday. Nonetheless, I think what has happened today was inevitable. We've seen David Teoh step down after 30 years with TPG. He's the founding CEO, and it was largely his vision that drove TPG. A lot of shareholders will see his stepping down as a loss to the company, and it could also mean that TPG has a reduced ability to compete with the gorilla in the industry, that is Telstra.
And AMP has refuted reports that its CEO is resigning, but what's brought all of that about?
Well, unfortunately, there's a lot of concern about the outlook for AMP. The strategic review and the engagement with the Hours Group looking to divest some or all of AMP has simply come to nothing. And the future for AMP is very, very unclear. Now, the board, although it said the CEO has not resigned, did say they were in discussions about the future leadership of the company. And so even though we haven't seen movement at the high executive level at AMP today, we could well hear news about future moves for the leadership team at AMP over the coming weeks.
Michael McCarthy there from CMC Markets. From the markets, let's now take a look at the flood situation in New South Wales and southeast Queensland. The Insurance Australia Council today saying more than 25,000 claims to date have been made, with an estimated loss of $385 million lodged. And that's, of course, since parts of New South Wales and southeast Queensland were declared a catastrophe. Shares in the insurance sector were mixed today. Insurance Australia Group said it expects the net cost of this event for it to be at $135 million. So that's $135 million. Meanwhile, Australia Post has warned mail and deliveries, including express post, may be delayed because of the floods. And for those customers displaced from their home, they can redirect their mail for free for up to 12 months. So a little bit of respite there for some people doing it tough. That is SBS On The Money for this Friday, the 26th of March, 2021. If you are listening to this as a podcast on apps or platforms like Spotify or Apple Podcasts, don't forget to leave a review or a rating. Or if you want to contact me, you can do that on Twitter or Instagram at Business Ricardo. We'll see you soon. This On The Money stream is provided for informational purposes only. The content in this stream should not be understood as constituting advice or a recommendation. It's not personal advice and it doesn't consider your personal circumstances or objectives. You should contact a licensed professional before making any financial decision.